Keeping up with tax rules can feel like a constant challenge.
It definitely can.
And that's precisely why ProTax Accountant, who I'm sure many of you know is, well, leading experts here in the UK accountancy world, have helped arrange this chat today. We're focusing on getting ready for making tax digital. MTD, as most people call it.
Exactly. MTD, it's basically HMRC's big plan to update the tax system, moving everything online, really. Digital records, digital updates.
It started with VAT quite a while back, didn't it?
It did, yeah. That was the first phase.
But now it's rolling out further to income tax. How's that looking?
That's the next big step, making tax digital for income tax self-assessment, or MTD-ITSA. And there are some pretty important dates coming up that people really need to be aware of.
Okay, so dates. When do these MTD rules actually kick in for income tax? Give us the timeline.
Okay, so first up, April 2026. That's for sole traders and landlords who have a gross annual income of £50,000 or more.
April 2026, 50K plus. Right. That's come around quickly.
It really is.
So if that's you listening, it's definitely time to start planning. What about people earning a bit less?
Yep. The next phase is April 2027. That brings in those with gross annual income between £30,000 and £50,000.
Okay, 2027 for the 30K to 50K group.
And then looking even further ahead, based on the 2025 spring statement, the plan is to potentially include those earning over £20,000 by April 2028. So it's going to affect a large number of people eventually.
It really sounds like it. Now, you mentioned gross income there a few times. Can you unpack that? What does it mean practically?
Yeah, that's a really key point. Gross income means your total income from your self-employment and any property rentals before you take off any expenses.
For expenses, right.
So even if your final profit is below those thresholds, say £50,000 or £30,000, if your turnover, your total income before costs, is higher, then MTD applies to you from that date.
That's a critical distinction.
Yeah.
Okay, and what if someone has maybe a freelance business and they rent out a flat? How do they work out their threshold?
You just add them together. You combine the gross income from all your self-employed activities and all your property income. It's the total figure that matters for deciding when you need to comply with MTD.
Okay, so add it all up. Got it. Are there any ways someone might be exempt from this, from all the digital stuff?
There are a few possibilities. For example, if you don't have a national insurance number. And also, there's the concept of being digitally excluded, basically. People who genuinely can't use digital tools for various reasons, maybe age, disability, or location.
Okay, digital exclusion. How does that work?
Well, HMRC is still finalizing the exact process for claiming that exemption. So the best advice for now is to check the details on gov.uk if you think that might apply to you.
Right, check gov.uk for the latest on exemptions. Okay, so that covers who's affected and when. Let's get into the practicalities. What does MTD actually mean day to day? First up, digital records. What does HMRC expect?
So think of it as swapping your paper files, or maybe that slightly chaotic spreadsheet, for a proper electronic system. You need to keep records of all your business income and expenses digitally.
Digitally, meaning?
Meaning electronically in a way that's accurate, complete, and kept reasonably up to date. HMRC is still refining the absolute final definition, but the core idea is no more paper ledgers as your primary record.
The shoebox era is officially over then.
Pretty much. And these digital records, they're the foundation for everything else MTD requires.
Right. So based on those records, what do you actually have to do under MTD? What are the ongoing tasks?
Okay, there are basically 3 key requirements. First, keep those digital records we just talked about.
Yeah.
Second, you need to send quarterly updates to HMRC. These are summaries of your income and expenses, and you have to use MTD-compatible software to do this.
Quarterly updates, okay. And third,
you file your final tax declaration for the year digitally, again using compatible software. So all in all, you're looking at potentially 5 submissions to HMRC each tax year.
5. Wow. 4 quarterly ones plus the final one?
That's it. 4 quarterly summaries and the end-of-year finalization.
That's quite a change from just one annual tax return. This obviously relies heavily on technology, which brings us to software. You mentioned compatible software.
Absolutely crucial. You must use software that's approved by HMRC for MTD for ITSS. You can't just, email them a spreadsheet you made yourself. It has to link up with their systems properly.
So what should people look for in this software? What does it actually do?
Well, the software is there to help you create, store, and, if necessary, correct your digital records. Some let you type things in manually. Others are smarter. They can link to your business bank account feed, pull transactions in automatically, or use things like receipt scanning apps.
Okay, so automation is an option. Saves time, presumably.
Definitely can.
But what if someone's quite happy using, say, spreadsheets currently? Do they have to ditch them completely?
Not necessarily. There's something called bridging software.
Bridging software?
Yeah, think of it like an adapter. It lets you keep using your existing spreadsheet or maybe older desktop accounting software, but it provides the necessary digital link to send the required information to HMRC in the MTD format.
Ah, okay. So it bridges the gap between your current system and HMRC's MTD system.
Exactly. But it's really important to check what any specific software actually does. Some packages might handle everything, the record keeping, the quarterly updates, and the final tax return. Others might only do, say, the quarterly submissions, meaning you'd need something else for the final return.
Right, so you need to make sure it covers all your bases.
Yeah.
What about different kinds of income? Like if you have self-employment income and UK property income, maybe even foreign property.
Good point. You absolutely need to check if the software can handle reporting for all your relevant income sources. Some are quite general, others might be more tailored, perhaps just for landlords, for example. You need one that fits your specific situation.
And personal income, like savings interest, does that go in the quarterly updates?
Not initially, no. The quarterly updates are focused on your business and property income. You'll still report other income like savings interest, dividends, or PAYE earnings on the final year-end declaration, much like you do now on the self-assessment return.
Okay. Another factor might be accounting periods, right? Not everyone uses the standard April 6th to April 5th tax year for their books.
That's right. If your accounting year is different, say you run it to March 31st, you'll need software that supports what HMRC calls calendar quarter reporting. Most should, but it's definitely something to check with the provider if you don't use the standard tax year basis period.
So, lots to consider when choosing software. Does HMRC point you towards any particular ones? Do they recommend any?
No, they're very clear on this. HMRC doesn't endorse or recommend any specific product. They just maintain a list of software that has met their technical requirements and is officially recognized for MTD submissions.
But there is a list. People can see the options.
Oh, yes, absolutely. As of early April 2025, there's already a decent selection available. Companies like, let me see, 123 Sheets, Absolute Excel, APRI, Capium, ClearBooks, Dext, Digita, Forbes MTD, Free Agent, Hammock, that's one for landlords, QuickBooks Online, Iris, Cashflow, Sage Accounting, Saraports, Untied, Xero. There are quite a few already out there.
That's quite a list already. And I guess some of those offer that bridging software option.
Yes, some are full packages, some offer bridging. They vary. Some might be web-based, others desktop apps. Some might be aimed more at accountants acting as agents, others directly for individuals.
And are there more on the way?
Yes, definitely. There's another list of software currently in development and testing with HMRC. Names like BTC Software, Coconut, FSB's offering, more from Iris, Cleta, Landlord Vision, QuickFile, Sage's free individual option, TaxCalc, TaxFiler, VitalTax, Wolters Kluwer, Zoho Books. So the choice should continue to grow.
It certainly sounds like there will be options. But choosing the right one, that still feels a bit daunting.
It can be, and that's honestly where getting some professional advice can be really valuable. Talking to an accountant, like the folks at ProTax Accountant, is a really good idea. They see lots of different systems, they know the requirements inside out, and they can help match the right software to your specific business and how you work.
That makes a lot of sense. Okay, let's shift gears slightly. The quarterly updates themselves, how do they actually work? What are you submitting?
Essentially, each quarterly update is a summary. It's the total income and the total allowable expenses for that 3-month period, pulled directly from your digital record.
Just the totals. So you're not sending, like, every single transaction?
No, not usually. It's summary figures. And importantly, these aren't full tax calculations. You generally don't need to make complex accounting adjustments, like for depreciation or accruals, at the quarterly stage. That's optional. It's more of a snapshot.
Okay, a snapshot. And what if you have, say, 2 separate businesses? Or a business and a rental property?
You need to send a separate quarterly update for each distinct trade or property business. So, yeah, someone with self-employment and a rental property would typically submit 2 updates every quarter.
2 updates per quarter.
Right.
And what are the standard quarter dates? Do they follow the tax year?
The default is aligned with the tax year. So quarter 1 is 6th April to 5th July. Q2 is 6th July to 5th October. Q3 is 6th October to 5th January, and Q4 is 6th January to 5th April.
And the deadline for each?
The deadline to submit the update is the 7th of the following month. So for the first quarter ending 5th July, the update is due by 7th August.
But you mentioned earlier about choosing different quarters, calendar quarters.
That's right. You can elect to use calendar quarters instead. So April 1st to June 30th, July 1st to September 30th, and so on.
And the deadlines stay the same, still the 7th of the following month.
Yes, the submission deadlines don't change even if you use calendar quarters. So that first April-June update would still be due by August 7th.
Okay. What if you make a mistake in one update? Can you fix it?
Yes, the updates are cumulative within the tax year. So if you spot an error from quarter 1 when you're doing your quarter 2 update, you can usually correct it in that later submission. There's a mechanism for adjustment.
That's reassuring. So you do the 4 quarterly updates. Then what? There's the final step, right?
Yeah.
The year-end thing.
Yes. After you've submitted your 4th and final quarterly update for the tax year, you then need to complete what's called the end of period statement, EOPS, for each income source, and then submit your final declaration. This is effectively your digital tax return.
How different is this final declaration from the current self-assessment tax return?
The information needed is broadly similar, but the process is different. A key feature is that the software will pre-populate your final declaration with the income and expense figures you've already submitted in your quarterly updates.
So it pulls the data through. That sounds helpful.
It should be. But, and this is important, you still need to review those figures carefully. You'll need to make any necessary tax and accounting adjustments. Things like capital allowances on equipment or adjustments for private use of business expenses.
Right. The fine-tuning still needs to happen.
Exactly. And you also need to add in all your other income details, like salary from a job, PYE, bank interest, dividends, any capital gains you need to report, and claim any reliefs you're entitled to. It finalizes your total tax liability for the year.
And the deadline for getting this final digital return submitted.
That deadline stays the same as the current self-assessment one. It's January 31st following the end of the tax year.
Okay, so 31st January deadline remains. Good.
Yeah.
Now, another term I've heard bandied about with MTD is digital links. What's that all about?
Right, digital links. This rule basically says that once your records are in a digital format, any transfer of data between software programs or between you and your agent, or even just transferring totals into your submission, must also be digital.
Must be digital. So how can you transfer the data?
Things like linking cells in a spreadsheet, emailing a data file, importing data using the software's functions, maybe even using a USB stick to transfer a file. These maintain a digital chain.
And what's not allowed?
What's specifically ruled out is manually retyping figures from one system or spreadsheet into another, or just copying and pasting blocks of numbers manually. The idea is to avoid manual reentry errors and keep a clear digital audit trail from the primary record to the submission.
Okay. Maintain the digital chain, avoid manual copy-paste or retyping. Got it. This all sounds quite involved, especially maybe for very small businesses or sole traders. Are there any simplifications? Ways to make it a bit easier?
Yes. HMRC has built in a few simplification options. For example, for businesses with turnover below the VAT threshold, there's the option to use 3-line accounts.
3-line accounts?
Yeah, basically just submitting total income, total expenses, and profit for each quarter. Less detail needed, though landlords have a specific rule about how they treat finance costs like mortgage interest within that.
Okay. Simpler reporting for smaller businesses. Anything else?
There are also simplified expenses rules, where you can use flat rates for certain things like business mileage instead of tracking every single fuel receipt. Also, if you claim the trading allowance or property allowance, £1,000 each, you might not need detailed expense records below that level. For retailers, there's an option to just record daily gross takings instead of every sale, and there are specific rules to help people who own property jointly manage their records.
So it seems there are ways to potentially streamline things depending on your circumstances.
Definitely worth looking into those options to see if they apply, as they could reduce the admin load a bit.
Okay, great. So as we wrap this up, what are the absolute key things listeners need to take away about getting ready for MTD?
I think the main message is, don't wait. Start preparing now, well ahead of those 2026 and 2027 deadlines. First step, figure out your gross income level to know when MTD applies to you.
Right. Know your deadline.
Second, start researching MTD-compatible software. Look at the options. Think about what features you need. Maybe bridging software is right for you, maybe a full package. Consider your income sources.
Explore the software options.
Okay. And third, really get your head around the basic requirements, keeping those digital records accurately, and understanding the process of submitting quarterly updates. Familiarize yourself with what needs to be done.
Understand the process. Got it. And if someone listens to all this and thinks, wow, I could really use some help navigating this.
Then absolutely get professional advice for really personalized guidance, help choosing the right software, setting things up correctly, and just making sure you're fully prepared. We'd strongly recommend contacting ProTax Accountant directly. Their team deals with this day in, day out, and can provide the expert support needed to make the switch to MTD much smoother.
Excellent advice. Definitely reach out for help if you need it. Thanks for breaking all that down for us today.
My pleasure. It's a big change, but manageable with preparation.